Good morning, good afternoon, good evening, traders from across the globe, and welcome to Short-Term Trading Live with Oscar's weekend webinar, baby. Yeah. The weekend webinar where we teach you about technical analysis of markets, and we speak usually about what news is paramount at the time. Traders, this video is being filmed on the weekend. It is March 20th, 2011 for trading March 21st, Sunday through Monday, 2011. What we have on the board is the 65% rule, traders, and we are certainly going to get to that. The last 4 to 5 videos that I've put out have been about that 65% rule, and we will discuss that. Futures trading, as we know, is risky and can cause substantial financial loss, so if you do not have risk capital to actually lose, you shouldn't be in this game. Now, traders, the weekend. I love the weekends because it allows me time to sit for hours on end and read through the newspapers, and I am very thorough. I read through things like the Wall Street Journal, the Financial Times Weekly. I read through Barron's. I'll go through the Times. I'll go through Investors Business Daily. Listen, I have about 10 or 12 other papers that I keep my eye on and many news articles that I'm out there. That's not all I read this weekend, but I didn't want to carry the whole stack. So I run through those papers cover to cover, and I write down the thoughts that cross me that are most striking to me as a 29-year veteran analyst and trader, and then I write those thoughts down. Now, I don't usually look for what would be transitory news, something that just happened today that made the Japanese disaster, so to speak. As far as my mind's concerned, that's transitory, and I don't look at that as to where the market is heading, where it's been, and where we will likely go shortly, where we are at the moment. I basically look at the articles that really matter to what's going on in the near to long term of our stock market and our currency markets. So, if it's about the little boy who got hit by the car, my heart goes out to him, but I don't care. If it's about an explosion somewhere, that's not what I'm looking for. That's not the type of news that I scan for. And you traders have been through dozens and dozens, if not hundreds, of the weekend webinars where I read you the news. And traders, I gotta say, the news continues to get better and better financially throughout the world. Let me read some of this to you. First off, the stress tests have been passed. Traders, banks once again in here in the United States went through a stress test, and the results were shocking. I'm not going to read you the results because I could care less what they were. The end result, did they pass, did they fail, is what I was more concerned with. Here it is right out of Financial Times weekly newspaper. Banks like JP Morgan and the like have been given the green light by the Fed to begin to pay higher dividends to shareholders and to buy back their own shares. In essence, this indicates, and I quote, they have weathered the crisis, returned to profitability, and are now in a position to pay higher dividends, launch more stock buybacks. The European stress tests come in April. So, hey, for the banks here in the United States, that does not mean the economy is crumbling for you bears out there. So stop worrying that we're in a bear market all of a sudden. Next, what do we have? Oh, China to raise cash on hand to large banks and lending institutions to 20% this week. These funds are stored at China's central bank. What they're saying is if you are lending money in China, you need to up the reserves that we hold on to for you in the central bank of China up to 20%. Traders, what does that tell you? The market seems to be on solid ground, especially in China, because China doing what they're doing by raising the capital requirements on their banks is the exact opposite of what the Fed is doing right now by adding liquidity, by printing the dollars that they're printing and buying bonds, right? The U.S. is adding liquidity at the same moment China's doing the exact opposite. So that tells you that China's doing well right now, and we, of course, have been getting back on our feet. Traders, get your chopsticks out. Let me tell you might as well start practicing OMNI because China seems to have this right so far. The news adds up to a strong year this year. Here's another article. Dalma expects big rise in global truck demand. Dalma expects a huge increase in truck sales despite consequences of the recent Japanese disaster. The world's top seller of trucks, the top truck maker in the world at the moment, forecasts a significant increase and renewed demand, thank you, Europe and other recovering nations at the moment. Traders cash rich Costco to begin paying dividends. There's companies all over this country paying dividends that are flushed with cash right now. Here's another article. 99% of the TARP money has now been returned to taxpayers. 99% of the TARP that was given out to banks. You can fight with me and the figures. I'm reading what came out of the news. They're not my figures. Don't go crazy on me here. All right. Big U.S. companies just paid about $8.7 billion out in dividends, and at least $3.4 more billion expected from those companies alone. Foreign investors are pouring in, baby. $206 billion spent this quarter on Yankee bonds. Go Yankee bonds, Yankee. We hate America. But you're buying Yankee bonds like they're going out of style. What's a Yankee bond? It's kind of simple. So far this quarter, there's been more Yankee bonds sold than any other quarter on record. These are bonds or U.S. debt that is sold by banks or companies, corporations outside of the U.S. It's other countries and big banks that borrow right from them, and they use it to give out money in their countries. The highest figure we have on record, and there's still 2 weeks left in this quarter. You tell me the U.S. doesn't look appetizing out there. China is back in corn, by the way. China last summer bought some corn, so we got a taste of it. This weekend and on Friday, China started talking about buying a lot of corn. So for the first time in 15 years, China looks like they're going to be a big buyer of our corn. Caterpillar's sales jumped 59% in the past 3 months, leading up to the month of February. This was before the earthquake in Japan, so don't blame it on that. Economies are looking better. AT&T buys T-Mobile for $39 billion. Traders, the list goes on and on. The papers look great for a long-term move to the upside, longevity in our markets. There is one problem, though, traders. We have one big problem here. We have crude oil. If we allow crude oil to continue higher, I don't care what I've just read to you, I don't care how strong the markets are, crude oil starts going too high, our markets are going to feel it around the world, certainly in our country, and certainly the more starving, the developing countries that can't even afford gas now, they do not need the price of crude to go higher. Traders, that brings me to the grassroots movement that we've been talking about, but before I get there, I want you to see something. You see this article right here? G7 in coordinated $25 billion action to stop speculators from driving up the yen. And here's what it says. Lots in the article, but the meat of it is this. The rise in the yen was the result of dealers betting that the Japanese insurers and other big companies would have to repatriate funds to meet claims and pay for reconstruction costs. Its strength threatens to inflict further pain on Japan as it struggles with the aftermath of last week's earthquake, tsunami, and the risk of nuclear meltdown. Japan's deputy finance minister warned foreign exchange markets that they should not assume that Friday's intervention was a one-off move. G7 countries agreed that if we caved into such speculative positions and that we would have allowed the speculators to take advantage of the people's misfortunes, the Japanese economy would be ruined and the whole world's economy would be harmed, he told Reuters. You know what I got to say to that? Hogwash, traders. We're supposed to speculate in these markets. There is something called intervention if these big central banks want to use it. That is a free-floating fair market, and almost all markets need speculators. That is not the instance in crude oil, however. Here's the thing. There is no G7 to come in and stop the crude prices. There is no concerted effort. There is nothing set up to stop these speculators from driving crude through the roof. That doesn't just wreck an economy like Japan or keep the Japanese bets off for now, because what speculators are doing to the Japanese yen is hurting their economy. That's sort of centralized. That's sort of centralized in the yen. Yes, the world will feel it a little, but it will not crumble the world. That is a market, pure and free. Speculators, yes. Hedgers, yes. You want to bet on it? Yes. You want to do whatever you want in those markets. You need to repatriate money. That's what they're there for. Speculators help out with that liquidity. However, in crude oil, you got plenty of liquidity. Every country on the planet is lined up with their buckets. Thank you, sir. May I have two more buckets of crude? Every country's lined up for crude. There is plenty of liquidity in the crude market. My fear is that speculators are going to do this summer what you just seen G7 defend against in the yen. They are going to take the price of crude so high that they are going to crush world economies. That, my friends, is what my grassroots movement is about. I love speculators. I believe they should be in all markets. You want the BOJ to play your game, speculate. Maybe they'll come out and attack. That's part of the give and take of trading. You want to wreck world economies around the globe. You want to sink every economy so that a handful of bettors can make money in crude. Absolutely not, traders. I do not like that idea. I think crude oil has got plenty of liquidity on its own. Speculators need to be pulled out of the crude. Position limits need to be put on. Right now, there's a position limit. You can buy 3,000 contracts of 1 month. You know how many months trading crude, traders? 36 months in a row. You can buy 3,000 contracts in each one of those. Think of the size of open interest. How many millions of gallons of crude oil do you actually need to hold? You're a speculator. Why would you have several million, if not tens of millions of crude oil in your account if you are not looking to take delivery? That's my point. Specs, we got to get them out before they drive crude to the price that destroys world economies. So if you are in favor of getting specs somehow out of the crude market, I mean completely out, let me know. Write some letters. Help get behind me. Help get behind me on this movement to get specs out of the crude. Again, I am a fan and a friend and an advocate of speculators. We need us in these markets. However, we do not need to spec the end of the world's economies by a handful making money in crude. There's my point. Grassroots, please get behind me on that. Now, back to the news. As you see, the news looking forward, looking down the road, looks pretty darn bullish, traders. You gotta like this. You cannot fall in love with the downside on the dip that we've seen. And with no further ado, I am going to take you to some charts right now that are worthy of the weekend webinar and should depict the 65% rule and what it's doing at this moment in time. Traders, with no further ado, let's go look at some charts. Traders, the U.S. leader, the Dow Jones Transportation Average Daily Bar. Is anybody sick of looking at this chart by now or what?
Yeah, we're sick of it.
You're sick of it, huh? Wait, you won't be at the end of this chart segment. Traders, this very same chart I've been bringing to you for 4 or 5 straight videos in a row. Traders, we started to come off this Dow Jones Transportation Average. As we started to break, there was some confusion. Is it a bear flag? Is it a bull flag? Do we know what's going on here? Suddenly, in the middle of last week, it comes to me after doing enough analysis, I realize it's nothing more than a pennant. And a pennant will usually have a false breakout around the 65% area. And what I mean by that is, if you break this pennant into 4 quadrants, 25%, 50%, 75%, and finally at the end you're at 100%, right? So from here to here is 25, here to here is 50, here to here is 75, and here to here would be 100. Well, as you're in that pennant, if you drop down around 65% area, visually is all you need to see on that. If you come down here and hold for a day or two, 3 days maybe, you will likely rally back into this, blow out through the top, and just keep on going. So that's what I was expecting, and I started to show you this chart, and I said, don't get nervous, because this is our 65% rule. It's the OMNI Trading Academy's proprietary rule, the 65% false breakout rule. So there it is, and what we would expect in the next few days is to get back into the apex area, or I should say get back into the pennant, and then break out past the 75% mark. So this chart was brought to you in at least the last 4 videos. Don't get bored, there's more behind this one. Okay, traders, this is the very same chart I brought to your attention on this day that we slipped down through or underneath the bottom line of the pennant. Look what has happened. It's almost incredible. We went here, here, and here. We settled right here, traders. Here is where we are now on Friday's settlement. We held right in the 65% area, went up 1, 2, 3 days so far. And if we come out of this thing on Monday morning, then our 65% rule worked perfectly. Traders, we've seen this coming before anybody picked up on it. That is our forte. We have a unique talent here at the OMNI Trading Academy. We spot these things before anybody else picks up on it. We report it to you, and then we all stand and marvel when we watch them work. Now, I'm not going to say I'm the best trader on the planet because sometimes I fumble the ball myself, but the analysis will point you in the proper direction. So here you are, U.S. leader, 25.50. It gets somewhere near the 65% mark, breaks down a little, falls, comes back up, and is threatening to break right out of the top. Let's look at another chart. Okay, traders, now I'm going to show you the ESM11, the June E-mini daily bar chart. It is the exact same thing, 25, 50, 75, 100. The leader went down, popped right back up, and is sitting here right now, poised to break out. The follower looks to be 1 day behind. Look where the follower is right now. Did come down, started to head right back up, right? It came down, 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 started to head back up, is here. It is here on settlement. We are expecting it to open up and rally up here, get back into the pennant, get back above the pennant, and off to the races we go, making the 65% false breakout work perfectly. Traders, so you've seen it worked on the leader. We're already back up here. The followers are still in question, but a follower usually follows its leader. Let's look at one more chart now. Okay, traders, the very same chart, but what I did for you now is I overlaid OTAPMA, or the OMNI Trading Academy's proprietary moving average. Lo and behold, what does the market do? Comes down to my average, boom, hits it, settles once below it, settles twice below it, and gets right back above. Meaning the 65% false breakout area meets with my OMNI average and makes perfect sense for the rally. Traders, don't you see it? There it is, technical analysis firing on all 8 cylinders, baby. Actually, this is a Jaguar. It's firing on all 12 right now. Look at it, baby. Looks great. Okay, traders, the 65% false breakout rule working. Now you've also seen OTAPMA, or the OMNI Trading Academy's proprietary moving average, give support to the S&P market and to the Dow Jones Transportation Average, by the way. Now we are looking at indicators. These are technical indicators of the Dow Jones Transportation Average. The slow stochastics pointing straight up right now, relative strength index pointing up, and your commodity channel index all pointing up, giving us bullish indications, holding the OMNI OTAPMA's proprietary moving average, and a bullish formation on top of it. Wow, baby, you got to expect this thing to go higher on Monday. Let's look at another chart. Okay, traders, now we are looking at some of the technical indicators in the E-mini S&P itself. They actually look even better than they do on the lead and the transportation average. Here's your commodity channel index pointing straight up in the E-mini S&P daily bar chart. And then here's your slow stochastics, once again, pointing straight up. So these charts and the indices are looking great for a Monday rally, traders. At least they are showing you that the disasters that you read about in the news in Japan are not going to pull the whole world's markets down. According to these charts, that is not what's coming next. Let's look at a few more charts, traders. Okay, June currency daily bar chart, the euro currency, traders. This chart has been in 3 or 4 videos as well. We've shown you that we're in a wonderful parallel channel. Then we had this nice bull flag we broke out of, and it looks like it wants to move much higher. It's up here right now. We are absolutely buyers of dips in the euro currency, and it's not just because of the euro currency. I'd like to show you what some of the dollar index charts look like right now. So let's take a look. Okay, traders, the reason for the solemn music is this. This is our U.S. dollar index. It's a daily bar chart. And what you will see here is shoulder, head, shoulder breakdown, shoulder, head, shoulder breakdown coming. What else is in there, traders? There are so many head and shoulders inside of this head and shoulders that I don't want to just keep drawing because you won't even see anything left on the chart. There are shoulders, inverted and upright head and shoulders everywhere you look. This big one, then the big one, then the little one inside that shoulder. There's one here. There's one here. They are all over this chart, traders. I just can't stop drawing them at this point. What this usually tells me is that is a huge, monstrous top in the dollar index. And I know, I'm bullish our markets, but you cannot be bullish the dollar index when you look at a top forming like this. Let me show you one more chart now of the dollar index, moving this out a little bit, looking at a monthly bar. Traders, not only was the daily and the weekly extremely bearish, long-term looking in the dollar index. But on the monthly chart, look at the size of this constructed head and shoulders right now. It is enormous. It is scary. This is on a monthly bar. The projections are for the dollar to hit the low 60s when it finally does start to break. Dollars do not look good. I can show you a quarterly chart that's even more bearish over a long period of time until the Fed starts to raise rates. Once the Fed raises rates, traders, all of this changes, but until the Fed raises rates, the dollar looks terrible. This is absolutely reminiscent of a market that will break down further. But what does that mean for the U.S. stock market? Cheap dollars make U.S. stocks cheap in very, very profitable companies. That means the world comes in, like I told you before, in those Yankee bonds and every other vehicle they can buy, and they buy our stock market. So a cheap dollar, buoyant for the stock market, the Fed doing its job exactly as they had planned. Push the dollar down, get the stock market to explode, and receive plenty of tax revenue for 2011, 2012. Traders, so far it worked for 2010's revenue. I'm sure the government will keep this going for 2011 as well. Pull your own charts, do your own homework, look at that dollar index chart. But more than that, find the 65% rule on your charts and follow it to the upside if that is what happens on Monday. Okay, traders, I'll see you back at the site. So, traders, there is my technical argument for where we are going in these next few days, and that dollar index does not look very happy, does it? I know, but so what? A cheap dollar will make the world come in and buy our products. It'll make the world come in and buy our stocks. It'll make the world come in and buy our real estate. We'll get back on our feet. Don't let those cheap dollars scare you. Once the Fed just mentioned slight rhetoric about possibly moving rates in the future, dollar will change course. For now, traders, expect that the street's going to start paying attention back to crude, back to the Middle East, and the U.S. dollar coming off. A little bit less attention on Japan now that they're getting it under control. That should be the shift. Keep your eyes open for that. Look for your 65% rule in your transportation average and your S&P. And come to my site. Traders, don't trade alone. Come to www.livewithoscar.com and hang out with me in my open live trading rooms where you'll find me as much out of 24 hours a day as I can stand it. And traders, that is no lie. I am always around. So come on down and join us. Don't forget, a stop is your best friend, and never, ever, ever fall in love with the downside until the market finally breaks. And that is not what has happened in the last few days. All right, traders, I'll see you at the site. Watch this video, then go do your homework, then come to my site. We'll discuss these techniques further. All right, that's about it. Anything else? Are we done? Traders, if you like the techniques I'm showing you in these videos, I will teach them to you live in my OMNI camp. The next one is being held in May 2011. Fill out the OMNI camp applications right on my website, and I will call you before April gets here, before we start deciding the date that we will have our actuals in April or May. I'll call you in April before May gets here, so we'll have an actual date, and you can book your tickets. All right, traders, I'm out of here. I'll see you at the site. Remember, say this to yourselves every morning, every afternoon, every evening, because it'll help to keep your emotions out of trading. And you know what that is. Stops are in. Emotions are out. Yeah, weekend webinar. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.